The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, another tough day in the soy complex on Monday. I guess one bright, shining spot was that we did finish off the lows to some degree. Corn was up slightly, following wheat a little bit higher. And it was a tough day overall across hogs and cattle on Monday. So kind of a mixed bag here. A lot to take a look at. Joining us now for market analysis, John Heinberg with Total Farm Marketing. John, good to talk with you again today. And I guess the overarching theme in the grains is welcome to summer, welcome to a weather market, because that seems to be one of the big reasons why this soy complex has been under immense pressure the last two sessions, John.
Yeah, that has been probably the biggest driver. Just also throw in end of the month, options expiration on Friday, and just concerns regarding still that overall demand picture. But the altering of the weather forecast a little bit away from some of those more extreme temperatures and lack of moisture, with a little more rain and cooler temps in the forecast, was really probably the biggest trigger in that soybean market. But encouraging at least a little bit today. I still think we got some further concerns to the downside in there, but at least today we found a way to fight off those lows. It's just a pure fact that we saw a little bit buying strength in that corn market today, and we saw some buying in the wheat market, which helped pull those beans up off the floors a little bit there. Now we'll see if we can get some things to kind of maybe help move that demand a little bit here as we go forward.
Well, and I think last week, too, we touched on this some Monday, and I think it continued through much of last week, is that I think some farmers did take advantage of the rally at the beginning of last week to make some sales, make some moves on if they got old crop or looking at even some new crop marketing. So I'm thinking that's maybe played some role here as well as we're getting up to the end of the month, options expiration. I think a good chunk of folks took advantage of last week's rally. Is that what you maybe heard, John?
And I hope they did. I heard some of that movement. You could kind of see it come into play there in terms of just how the prices went. We're at that stage now here in terms of those old crop supplies that if there's any out there, it's going to need to start moving around here pretty quickly. I'm a little anxious for the month of August and what's out there for corn basis contracts. I do think we did see some good movement, like I said, off that last rally. Maybe some of them got priced out. There's still a lot of bushels that do need to move here. And that's going to be kind of my tell is what happens with some of those basis prices. Do they start falling apart? That just tells us the market's getting comfortable with the corn supply. Again, we still have a large pile of corn in storage, at least according to the stocks numbers from the USDA. And I just hear that from talking to people that are in the end user side, that there's still just plenty of supplies available to them. And unfortunately, the market will likely go after the weaker long again in this window here. And that is that producer again sitting on corn.
Well, that's something too that I think we got to think about here, because really the next couple of weeks going to be pretty pivotal for anyone who's sitting on some of that old corn, et cetera. With the end of the month here, that always leads to volatility, options expiration, a lot of different things here. Rubber's going to meet the road, so to speak, here for some folks here, just in very short order, John.
Yeah, very much so. And that's a big concern for me. And then on top of that, we had a nice little movement in some of that basis. And I heard some guys picked up some more basis contracts on that old crop corn, thinking that we could still see some rally. And again, those are probably quickly behind the eight ball a little bit here as the market started working itself back lower. I mean, realistically for corn, we're range bound right now. And we've been there, since we got done with the USDA report, back at the first part of the month. We got 405 on the bottom, 420 at the top. Realistically, 415 seems to be kind of that area where even the open interest and the volume kind of dries up a little bit. We saw that today as the market got up to about that 413 point on that December price. And it just looked like the sellers or the buyers disappeared and the sellers took back over again, at least to put it on hold. So till we break out of that range, that 405 low, that series of lows that we have, there's going to be a really key floor. A lot of times, though, it makes me a little nervous. You get these kind of moves, you're sideways for a while, just builds up some momentum or, coils the spring, per se, as we say. And if we break through that bottom side, that could really kick in some strong selling pressure with just some stops and some downside targets that could be well in advance of this market. So defensive is still my posture until proven otherwise. You keep hearing it. There are pockets of bad. There are pockets that are very, very good. And right now, at least in the market's mindsets, the bad is outweighed immensely by the good. And we could see ourselves a pretty strong yield going into the fall, as well as a carryout picture that could be very, very difficult. So now the key is still we need the demand. Corn demand has kind of picked up at least a little bit here. Another reason we maybe kind of dug our heels in at this bottom low, just above the $4 handle, as we're seeing, today solid export shipments or inspections at 42 million bushels. Those are numbers that we need to continue as we're getting close to the end of the marketing year at the end of August.
I think about this too, John, and to that point of the clock is ticking here for old crop, but even new crop too. I think both of them together, to your point, being defensive here is going to have to be the name of the game, I would think. As much as some folks might want to bury their head in the sand because they don't like these prices, you can't get complacent in this window if you have a lot of risk on the table because, again, that clock is ticking, John.
Yeah, and there's still downside here in front of us. For me, Dick's target's probably the 350 window. And then you can see even, if things kind of fall apart, even worse moves that could be coming in the longer term here. So, 50 cents a bushel from where we are now, that's a pretty big impact when you start spreading out across the bushels that you have in your operation. So, again, I just kind of encourage guys, get a handle on that near-term supply, get a floor underneath this market. Let's hope we're wrong and this thing takes off. But right now, I just don't have any indicators that are telling me that is coming at this time frame. That if anything, we continue this sideways pattern with the potential for making another break lower, barring something dramatically changing in the next few weeks.
Wheat was a bright spot Monday. I know still watching some of the issues overseas in particular, but even with a large spring wheat crop on tap here in the U.S., we still found some strength across the wheat trade on Monday. Any notes for us there across the board, John?
It was a good day today in that wheat market. It had potential for really falling apart early, found a way to reverse itself around, put what we call a hook reversal in on the daily chart. So maybe we get a little additional short covering there. The other thing, too, I'm just thinking about what is the day today? We're the 29th of July, July 30th tomorrow, end of the month is here. And that could have been some of what we saw in the afternoon trade today is that the amount of selling pressure we saw Friday and the first half of the morning today just allowed the funds to start taking some profits and squaring up a little bit. Plus, also, don't forget, we can report that next commitment of trader on Tuesday afternoon for Friday's release. There's a spot here where as hard as they sold it, they could quickly buy some contracts back. COT numbers still look like they're on, getting out of some of those short positions like they have the last 2 weeks in corn. And at least maybe make all this movement just kind of not really be reflective in terms of the managed money positioning. So, again, I'm still cautious here. Just not seeing the news I want to see on the demand side. We can talk all we want to about acres and supply and yields and things of that nature. Yes, they do make an impact, but nothing makes an impact more than, getting 1 million metric tons of corn sold or soybeans sold on a weekly sale and just seeing those numbers pile up. Because right now, the thing's going to turn this battleship for these grains is going to be that demand side. We've seen some pretty good uptick in wheat demand. I think that's some of what's going behind here that's helping find that market, maybe find a little bit of support, even with the large supplies from that, SRW harvest, as well as the potential spring wheat harvest coming up relatively soon.
We got to remember these markets are largely a function of supply and demand. Supply and demand, John. And you make some great points there as we look at this picture. And thinking of demand, too, I think of the dollar. I know we're going to be watching the outside macros this week with the Fed meeting. Sounds like the prevailing theme going into the meeting here this week is that there won't be a change to interest rates, things like that. It sounds like it could be a fairly quiet meeting in particular.
Yeah, it still comes down to what they say versus what they do. I think the market's pretty much counting on that. They've priced in an interest rate cut in terms of some of the equity markets, at least until the end of last week, in terms of that happening in September. But then we need to see what the rhetoric is or the chatter outside of that meeting when Fed Chair Powell makes a statement on, later in this week. That's really what the market will be looking for, some type of indication what could be happening in that regard. So, The other side of it too, when you start talking about currencies, we continue to watch what's going on in terms of the Brazilian economy, what's happening with the Brazilian real. It was moving back to retest some of those lows against the US dollars. How's that play? It makes those Brazilian beans more affordable for the producer to sell, and then they can come back and buy their inventory in dollars. So that's some of the things that's really, I think, been weighing on the bean market, is that weakness in the Brazilian real and how that currency stacks up against global currencies, obviously making those beans more affordable to the export market.
We are talking with John Heimberg from Total Farm Marketing here on today's Market Talk. John, let's go to livestock. Rough day, hogs, cattle, a lot of triple-digit pressure. Maybe start with the hogs. I saw some chatter about some African swine fever cases in Germany that maybe had a little impact. I also wonder, though, too, getting to the end of the month, maybe taking some profit in hogs. Anything else I missed in that hog sector on Monday, John?
Again, a couple different things in play there. First off, we did have a nice relief rally there. Again, got back that December contract up into that 70 window. There was a lot of resistance there. It was about 50% retracement of that move. So technically, it was a point we could roll over. End of that, just still some of the concerns on the demand front, the carcass side of things, the cash market, where we are there. Just felt like maybe the market was getting out over its skis a little bit with that strong of a rally point. And now the technical selling kind of kicked back in again as we broke through some key moving averages today. I wouldn't be shocked that we have another chance to go back and retest some of those most recent lows, just in that hog market. I think they did come over and spill into the cattle market today. Retail prices still a little bit softer at midday, $313 on carcasses, but on choice, that is at least stabilized. We're even kind of sitting here now for about a week. Cash trade was a little surprising, up $1 on the week. I did think we threw some premium in for the hot weather at the end of the week last week too, and with things maybe moderating a little bit, some of that may have came out today. I do think that last factor, like you said, end of the month here coming up tomorrow, that there was some money moving in and out of these markets, and there was a chance, an opportunity here for take some prices out. Now, kind of going back to that cattle market, we had a chance here to really maybe kick in another breakout, and that was a little probably the most disappointing part today. That August contract closed above the trend line over top the highs. So did October and December. Just couldn't get that extra follow through, and obviously reversed right back through them today. So, it's a market realistically, if you look at it, we're just in a sideways fashion, building a bit of a big old wedge pattern in terms of like October cattle. A little bit of a breakout here, but again, just back to the top of the range, and we fail again. So we'll have to see how far this cattle market wants to move. Obviously, watching what cash trade's doing this week, that'll be another big key piece of the puzzle. So it felt like last week Packers were trying to get ahead of the heat a little bit here, and did bid up to try to get some cattle moving.
Well, and to that point in the cattle, I think about this as well. This is another market you don't want to get complacent in, especially as we're bumping up against the top of this range. Maybe it's a spot to get a little defensive here just to be safe across that cattle complex, John.
It's a market that makes me a little bit uneasy, as much as the fundamentals in terms of the cattle numbers, and at least where demand is here, holding up, 313 choice carcass is nothing to sneeze at in terms of its value. As long as it's holding, that gives us some upside potential if ever something were to kind of fire this market back up again. But it's also at a point too here, you need to have some floor in mechanism in. I know it gets a little bit difficult because the basis is so wide between the futures market and the cash market. Now we've seen that narrow up in that August contract as we get closer to the month of August here, but that's still one of the things from talking to producers makes it a little bit more difficult, is where that cash market is versus futures, and how to build some defensive strategies around that. So again, I just still use the safety valve puts. Just keep some floor underneath. Keep your cattle open to the upside if you still feel optimistic about upside rise. But again, this is a market that's going to be moved around with a lot of volatility. And between now and obviously the election, I think that's going to be a very key piece of this thing here. I think there's going to be a lot of volatility in these markets based on what may be happening at the geopolitical level here in the United States.
That's a good thing to think about and keep in perspective as well. How about the dairy market, John? Let's wrap up there a little bit. Any big notes for us here this week?
Dairy market, again, there's another one of those markets really trying to find some overall direction. Now, we've had a nice little move out the last couple of weeks. We've seen cheese prices kind of firm up. Maybe that's some of the getting back to school buying in terms of some of the dairy products in that regard. So we've seen some prices, at least in some of those deferred contracts, move, but really in the front end, we're still sideways and range bound, 20.50 on the top, 19.50 on the bottom. Again, just trying to figure out which way we want to go. Now, this market has a significant top in it. A little more fearful that the path of least resistance, once we break out of this sideways range, will likely be softer, just given the direction we came into this consolidation pattern, especially in that August and September contracts.
John, any final thoughts for us? Anything you want to reiterate to folks here this week?
Don't fall asleep on things, whether it's, looking out the 25 and do we get some value going there? I mean, we are at the potential. We could see a large supply come at us in terms of this corn harvest and possibly soybean harvest. I was looking at these 25 over the weekend, over the end of the week into this week for some producers here, 450 as a start point. Not a lot of people love it, but it might be where we need to start, and get the toe in the water. It's always easy to come back and reown things and secure that floor. Because again, I'm still looking at downside breaks that would be fairly significant. And those deferred contracts are obviously going to follow with them in the longer haul, taking away from some of those margins that could be there, at least for us a little bit as we move into 25 and even out into 26.
Yeah, good things to think about for folks. John, if they want to reach out to you, have a conversation there at Total Farm Marketing, what's the best way to get in touch with you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
John Heimberg with Total Farm Marketing. Always good to talk with you, sir. Thanks for the time. We appreciate it. We'll talk to you again soon.
Sounds good. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.